Oh, we have Robin Cross on the line. He is with StoneX. He's located in Chicago. And we love to talk with Robin about all things lumber related in the lumber markets. Robin, good morning. How are you?
Good morning, Marlon. Thank you for having me. Missed you, good buddy. So let's get into it today. We got kind of a lot to cover, so I'll make it quick, though. Well, let's do prices first. So we got May big board, 370, down 240, only 35 trades. That's about the quietest open we've had. It's been very busy these past couple weeks, and so it's nice to kind of have a little chill moment so we could talk. And then we got to talk about the new truck contract starting May 15th. You know, it's been open since August 8th, but pretty soon that's going to be the only outlet to trade lumber. So the mini May, we'll call it, 481, that's down 3. And if you notice, there's a $100 premium between the mini and the big, and that's obviously, it's weird because this is one of the only contracts that I know of, and I've been trading, obviously my whole life, that actually has the shipping baked into that. The price is delivered Chicago, so that's about $100 to get it from the originating mills to here, so they add that into the price. And then over to the July mini, we're trading at 500.50, which is down $1.50. You had 18 trades in the front, 11 in the deferred. So we got, all right, let's get into it. So after March expiration, due to the massive production curtailments, there was this bullish sentiment you and I talked about every day into the market, and it was for good reason. The cut was a substantial, record-breaking production cut. I mean, we're taking literally 1 billion feet off the market. And in fact, we really did rally from that. March expired on the 15th at 347 even, and we saw futures rally for the May contract almost in a straight line. We got the market up to a new recent high of $468. So it was a good rally. So from the 16th to March 20th, we baked in about $121 into the market. Well, Marlon, then reality set in. Banks begin to fail, making traders uneasy and cautious, to say the least. And then to top that off, the Fed continued to raise interest rates, therefore putting additional pressure on housing and lumber as a whole. Even with the production cuts, market still lacks confidence. And the final piece of this bearish news, if you remember on the day of expiration, you and I were on the air just before March went off, and I said, hey, we just left this big old gap from 348 to 415, so a $67 gap, and that is way too big of a target on the downside to ignore. In all my history, we literally left only a couple of gaps, one at the all-time low and a few when we went up to 1700 to the high. So this market always has a tendency to go back and fill those gaps. So even if you have great news, it's just market makeup, that kind of gets this thing going. So the combination of those three elements caused the market to break with long liquidation, and you had some new hedge selling because we were at massive $80 premium to cash, right? So prices went from the 468 high, we just finished being down 9 straight days, to a new recent low of 373. So we took a good about $95 out of the 121 we gained in that short order and just a few weeks ago. Even though we saw this massive break, even though we have high interest rates and, there's a lot of uneasiness and nervousness in the market, I still don't believe that you want to accumulate some massive short position below 400 or even 380, simply because that's so far below the cost of production that I feel like the only tool the sawmills have in their toolbox is literally production cuts. So I've been on high alert, watching for additional cuts, but they're a little slow goings. I think they like to see how the market stands on their own merit before they start laying guys off, which makes total sense. And lastly, we have cash, random length cash print was coming out 357 yesterday. It's down 11. So we're still struggling on the underlying inventory in the field. Still seems pretty decent, but going into the building season with the market being at literally the lifetime average of 355, I would say guys should really start thinking about their forward needs down here. You don't have to load the boat, but it would be better to have a little something than chase it later.
Good point. Good point. Well, I'm glad you brought that up. Interesting perspective there, Robin. Of course, as we get close to the end of the lifetime of those rail car size contracts and start transitioning over here to these truck size contracts, it is going to take a little while to get used to all the new data and the formulas and all that. But thanks for explaining that. Did a great job. Appreciate it. And we'll talk with you again next week. Robin Cross of StoneX. He's in Chicago. That's a look at our lumber markets. We'll come back in a moment, and I'll do a rundown of our livestock trade right after this.